Here's how you can avoid 100% of your income taxes every single year. We call this strategy the paper loss strategy. In order to use it every single year, you have to understand the rules. The very first thing that I'm gonna need you to understand is you're gonna need to buy an investment property. When you buy a rental property, it could be an
Every year?
Airbnb or it can be a
Okay.
long-term rental. But as soon as you purchase the property, I want you to write off everything that's on the inside of the property. This could be appliances, bathrooms, tubs, cabinets. And when you write off everything that's inside of the property, it creates a big expense. We call this the cost segregation study. Once you do the cost segregation study, it creates a big enough loss to offset your W-2, your 1099, your stock, and your crypto income, making you tax-free. Comment below if you'll be investing in real estate to avoid W-2 and 1099 income taxes.
Offsetting your W-2 income is a pretty bold statement. You typically cannot offset active income with passive losses. You can up to a certain extent. It kind of depends on how much money you make. You know, if you make under X amount, you can write off up to $25,000. If you're a real estate professional, potentially you could write off more. But in general, it's not typically the best strategy. In addition to that, a cost segregation study is a real thing, but it's got to be done by a qualifying engineering firm. So saying just go write off all the stuff on the inside is a little bit ridiculous. Whenever you do a cost segregation study for real, they'll give you a report that says, here's how much each different asset class is. Whenever you buy a property, if it's a residential rental, it's going to be 27 and a half for the building and everything inside it. You can do the cost segregation study and they'll break it out by qualified improvement property, this, that, and the other. And some of those you can actually use section 179 or bonus depreciation to accelerate the expenses for. But in general, you can't just go buy a property and say, I'm going to expense everything fair market value. You got to do it the real way. And it costs money to do it the right way. It can be good for the right situation.